Gord, do you want to do a little bit of introduction? Tell us a little bit about yourself.
I do that in my PowerPoint, so.
Yeah, we just want to tell our agents why and how we think Gord is a great person to come on as a guest in our Zoom webinar today. Is we've been, Gord, trying to bring all the agents up to par and keep everybody active through this time where everybody is not necessarily active. To build on something, to put in new ideas, to start working on new platforms that they may or may not have been taking care of. While, you know, when you're busy and you're just, the train is out of the station, it's just run, and you don't really have time to actually calibrate what can bring more business to your table. So this is also a great opportunity for all of us to sit down and organize and kind of replan things for when things open up, and where is your business going to be at that point. If you are shut down and closed off and you're out of business basically, then it'll be a restart. Whereas when you spend time through this period actually building your business and trying to get somewhere, you would actually have a head start, and the plan would be there. This is how Gord came in. He isn't going to introduce himself, but a very quick synopsis. He is an investor. He has been a realtor. He's been a mortgage broker, and now he's a trainer. And most interestingly, he's a musician. Has played bass in Toronto and is still playing it. And he's a composer. Used to live in Streetsville, so he is our neighborhood gentleman, and now lives in British Columbia. So I'll let you take it from there, Gord.
Okay, well, thank you. Should I share my screen here?
Yes, absolutely.
You guys seeing that?
Mm-hmm.
Absolutely.
Okay, cool. Today, I want to welcome you to creating a consistent 50 deal per year business. And today I want to show you how to basically, you can dominate your market and literally transform your business into a deal generating, referral generating, money making powerhouse. So how does that sound?
Amazing.
All right. David, I would love for you to, I'm going to ask people at some point to kind of raise their hand or say something in the chat box just to make sure people are tracking with us, that they're not falling asleep at the wheel. So can you keep an eye on the chat box?
Absolutely, will do.
Great, thank you. So essentially, and maybe mute people that are, that need to be muted. Okay, so I did some research here, and there's basically around 48,000 real estate agents in the GTA, which is a heck of a lot of people. Now, basically 20% of agents sold 0 homes last year. That's 9,600 people selling absolutely nothing. 52% of agents, which is the majority, sold between 1 and 6 homes last year. So that's almost 25,000 agents. 14% of those agents sold between 7 and 12 homes. 10% of agents sold between 13 and 24 homes. 2.5 agents, I don't know how they figured that, how much half an agent sells, but that's just statistics for you. 2.5% of agents sold between 25 and 50 homes, and only 0.4 of agents sold between 50 and 99 homes. And of course, less than 1% sold more than 100 homes. Now, today I want to show you how to build a 50 deal per year business by understanding the investment side of real estate and how you can build that 50 deal per year business into even a 60, 70, or 100+ deal per year business. And if this notion sounds crazy to you based on how many deals you're used to doing, I have really good news for you. You can already see that there's agents in the GTA who are actually doing 50 deals or more per year. So we know this kind of volume is actually possible. Now, how many of these realtors have a huge advertising budget? Well, you know, the ones whose faces are on all the benches and bus shelters, but they're spending $10,000, $20,000, $30,000 per month. And if you've seen that there are 48,000 realtors in the GTA, that is a crazy amount of competition. Agreed? So how about today I show you how to create a 50 deal per year business without having a huge advertising budget and without having to have your face posted all over town, and without having to compete with all these 48,000 realtors in the GTA. Sound good?
Amazing.
Cool. Well, I hope I have your attention. But you may be asking yourself, who are you and what qualifies this Gord guy to show me how to build my real estate business? So can I provide you a quick history?
Please.
Thank you, David. So I'm an active real estate investor. I've been investing for over 32 years in both Canada and the US. I've been involved personally in over $50 million worth of residential and commercial real estate using multiple niches and strategies. I've been a realtor. I've been a mortgage agent. I was a mortgage agent for 12 years. And I've been a real estate trainer in real estate investing for 17 years. I personally trained well over 7,500 investors who have gone on to create millions in net worth. I've written some books. I've written over 30 articles for Canadian Real Estate Wealth magazine and a couple in the RAIN report. But as an investor of over 32 years now, I found a common frustration in the business, and here it is. I have formed multiple teams of investment-minded professionals in cities in southwestern Ontario, in British Columbia, Metro Detroit, in Phoenix, Arizona, in Maricopa County, so in Mesa, Arizona, in Tempe, Arizona, in Fort Myers, Florida, and in Houston, Texas. And get these, I have put together teams including investor-specific mortgage agents, lenders, lawyers, contractors, property managers, insurance agents, but check this out. Consistently, in any of those markets, I've built specific investor-minded professional, investor-minded professionals. The investment-minded real estate agent is always the hardest to find. They always seem to be the missing piece. Now, why is that? Well, because most real estate agents I've encountered, and believe me, it's hundreds, have not had the training and therefore were not able to analyze property. They couldn't provide key local data that I was looking for. And at the end of the day, they weren't able to provide me the deals which adhered to my investment criteria. But that's okay. Again, I understand there's no training for agents to understand how to do these things and excel in this part of the business. But the funny thing is, if they did understand this aspect of the business, they would find it so easy to stand out in the marketplace because so few agents actually do understand the investor side of the business. And yet, there's so many investors who experience the same frustration with realtors that I've experienced. And every investor is looking for that realtor who understands them and their criteria and can provide them profitable deals. And for the realtors who do work with investors, they generally have pretty amazing and profitable businesses. So why is working with investors so much more lucrative? Well, investors have some common characteristics. So unlike regular home buyers, investors are always looking for deals. They do multiple deals per year. They often work with other investors so they can do more deals. They joint venture with other investors, and they're not emotionally attached to properties. So there's less criteria involved in, the colors being this or that or what have you. And they close faster, and they often will generate to do bigger deals. So you can be saying, hey, Gord, hold on a minute. I've heard investors are frustrating to work with, aren't they? Don't they just waste your time and never buy anything? Well, the answer is this. If you don't know the level of experience of the investor, the financial capability of the investor, or what the investor's investment criteria is, and don't know how to get to the heart of it by asking the right questions, well, frankly, you will waste your time and theirs. But there's a simple way to understand if the investor is experienced and a credible prospect who will do deals with you. And that leads me to my first quote unquote secret in building your 50 deal per year business. And so just like a regular home buyer, when you typically ask questions to understand the type of property, the location, financial capacity of the client, in any investor situation, you need to qualify that investor to understand their criteria by asking key questions. And of course, this seems obvious, but I can count on one hand the amount of time that I've called up a realtor, asked about an area or a particular property I found on the MLS, and they just quickly jump ahead to getting my email to get me on an MLS drip without really digging down into my specific criteria, and then end up sending me listings that don't fit the criteria. So here's the first secret. And again, seems obvious and I apologize if this sounds harsh, but if you don't know the right questions to ask to qualify people like me in that initial conversation, you'll already be telling me you don't know what you're doing. So before you ask them for the email and get them on an email drip, it's important to qualify the prospect. And in doing so, you'll have a much greater temperature for the person's experience, their goals, their capacity to move forward, to buy property as a legitimate investor. And you'll find out if they're a newbie, if they're a tire kicker, or if they're a legitimate investor. So asking questions like, what strategy are you looking to implement? What's the property type that you're looking for? What geographical area, of course, and why that particular area? What research have you done, or have you done any research, or is it just random that you're picking that area? So why that particular area? What's your price point? What expected returns are you looking at? So depending on the type of strategy, you can be asking about specific cash flow targets. If it's a capital gain that the investor is looking for, what's the capital gain target? What's the cash on cash return? What's the cap rate, if that's applicable, if that type of strategy is applicable to that? And then ask, how did you come up with that? Or how are you determining that number to see if it's actually credible what they're expecting? And then how much capital are you looking to deploy? They could have, $1 million and they want to buy 5 properties like right away. So is it just you, or are there multiple investors involved? Again, I said investors like to joint venture with each other. When they personally get financially tapped out and can't buy any more property, they will find other investors to work with so they can continue to build their portfolios. Have you pre-arranged financing? Are you and your investors already pre-qualified? And of course, how soon are you looking to purchase? So what have you learned from these questions? Well, obviously you've learned the target area, the property type, the strategy they want to implement, and the price point. And now you have an experience. Now, that's if you have an experienced investor who has done their research, knows their ideal strategy, property type, what their purchase price is, and the returns that they can get. So you'll be able to understand how financially prepared the client is, and if they can actually pull the trigger on a property. So, and by this line of questioning, you'll also be able to understand their level of experience. And that's really important, because you have to understand as a realtor, how much are you going to be an educator in this process by helping the investor understand the market and potential strategies to utilize, what kind of cash flow is available, and what kind of returns that they can expect? Or is it a seasoned investor and all you have to be is an order taker? Basically, here's my criteria, go out and find a property that falls within this criteria. So let me ask you a question. Have you ever had repeat customers? Any client buy or sell with you more than once?
Yes.
Can you raise your hand or type in the chat if you've had repeat customers?
So 2 people raised their hands, and we have 2 people saying yes, Salva and Regina.
All right, very good. So that's great, right? It's great to have multiple commissions from the same client. Thank you. But I think we can all admit that realtors sometimes are not the best at follow-up, right? So I want to show you something that may encourage more follow-up for you in the future. Now, let me ask you a question. Have you ever calculated the lifetime value of each client in your database? Now, this is a very interesting thing, and this is kind of, I call it a secret, but it's just something that should be done by every agent regarding their clientele. And calculating that lifetime value is so important, because when you understand this, you're going to be able to understand how this can actually change your business, and follow-up may become more of a priority. Just saying. Figuring out the total commissions that can be earned from every client throughout your entire relationship with them over their lifetime, plus the commissions from any referrals you can get from each client. So check this out. All successful businesses go through this calculation. They calculate how much money their customers will spend with them over that customer's lifetime. From that number, they're able to make better business decisions and understand profits from each location over time, and whether to invest in a new location. So let's look at your business